A hospitality property fund is a REIT, and that's a real estate investment trust. It's invested in the hotel and leisure sector, controlled by Tsogo, and that's after a deal to acquire a number of their properties. The market cap here, 8.2 billion rand, a historic yield of 7.1%. Why has this made your hit list?
Yep.
I think it's very specific. So obviously, if you buy a hospitality property fund, you're getting exposure to the tourism and leisure sector. So they don't only own Tsogo Sun hotels, so some of the Radisson Blue hotels, both in Joburg as well as in the Cape waterfront, some Holiday Inn hotels. So it really is a play on the tourism and leisure sector, and specifically the property side of those sectors.
So that is kind of exciting, because the trend globally has been for hotel managers to not own their properties. It makes more sense. They can then just have a higher return on their own activities, and then other investors can take the long-term view with the underlying properties. So that's good and well.
Can you give us a little bit more before we go further with this as to where they are exposed in the hospitality sector? I think that's important from a geography and to understand the tourism underpin.
It's a very good question. So predominantly the Western Cape, as well as in Gauteng. So not too many outlying areas. And obviously with the Tsogo transaction, they're exposed to 4-star and 5-star. So it's not your budget, it's not your 3-star hotels, it's your 4 to 5-star in your bigger economical nodes of
which
Gauteng,
you would hope would be
Cape.
relatively defensive. And I suppose tourism with the rand under pressure, that's got to be something to be said for international visitors.
Well, there are a little bit of here and there. We've seen organisations like City Lodge report slightly declining occupancies. So there's a bit of a net knock down as a function of the weak economy and restrictions in terms of government spending. But maybe City Lodge is positioned a notch below that. You may or may not know that South African tourism inbound has been very successful the last year, not because we did anything right, not because the government did any favours by not making that unabridged visa nonsense go away, but simply because terrorism, places like France, Turkey and others, resulted in a massive influx of additional tourists coming down.
And as I said earlier, more bang for your buck. I mean, you've got an exchange rate around 13 at the moment on dollar.
No, but this one, is the share chart available? Yes, there you go. So it's kind of been doing funny things because of this deal with Tsogo took a long time to kind of bring to fruition. Tsogo first bought up stock in the market, getting to a 50% plus stake. Then they said, oh boys, now we're going to re-inject a whole lot of our properties. They got external valuation opinions, of course, but it has taken a ways coming. What do you think of it, though, as a yield play? Is this one you like?
7% yield. I mean, it's quite a nice yield. I'm just a little bit concerned about the cyclicality. So I do think it's a stock to watch. I'm just a little bit concerned about where the economy is going.
So cyclicality of the tourism industry as a result of weakened GDP.
That's right. So I think,
although it doesn't, as Paul was saying, it doesn't impact the local environment, won't impact international visitors into South Africa. I'm
nitpicking here, but I think that definitely is a little bit of a concern for me. So if there is a nice recovery, it's definitely one to watch.
Hot, not hot?
Not hot for now.
Not hot. Paul?
I'm going to go hot. I just think that inbound tourism story ought to be supportive. And once the noise subsides of the deal and it now kind of becomes clearer what the mission is, maybe there's scope for some year-on-year improvement.
So you are going against the advisor, the stock picker on this one. You are hot?
Yeah, well, you know,